And there you have it. We are officially closed on this Wednesday, August 13th. Welcome, welcome, folks. We have live right now with us live. We have Nod from our news feed service. And Nod, the markets do not want to go down. We obviously see that, but the other thing I'm noticing is that the historic or traditional forms of valuating stocks are basically out the window right now. What do you have to report on any of the economic news, geopolitical news, or anything that you're seeing out there, especially from our members?
AJ, there is no shortage of anything. AJ, good afternoon for Wednesday. This is not, and we're live from the Music City, Nashville this time as I move my daughter into her freshman year of college. She seems confident and fearless, which makes me really happy. But you know who else is currently fearless, AJ? That's the U.S. trader. If
Yeah.
you look, if you look at the VIX here on this tab, as you can see, yesterday and today it closed at its lowest level of the year. I'd like to do a combo ask of you, if you don't mind. Let us know what you're seeing in the VIX, and of course, and then let's do a pivot. I want to talk about two widely held names as well. Apple, and which for those of you who joined us just last week, is up 13 bucks from AJ's mention just exactly 1 week ago. He'll never toot his own horn, but I will. And then also Tesla, which as of yesterday traded green for the fifth straight day, its longer streaks in May. So AJ, as you know, both of those names got whacked earlier in the year, and they've kind of ground their way back and as they navigate the White House headlines. So can you do a 3-pack for me with the VIX, Apple, and Tesla, please?
Sure. Well, if you take a look at the VIX here, this is the daily candle chart. I'm using the Thinkorswim platform. It's still hovering around these support level lows here from back in February. And it looks right now, the CCI, which is down at the very bottom, I'll circle that for everyone. That CCI is my most favorite indicator because it's very sensitive to pivot points and changes in the momentum. It's more sensitive than the stochastic. So you could see right now, let me expand this because it's a little bit hard to see if I'm not pointing it out. You see the lows on the CCI, how we're at a higher low, but we're at a lower price low. You see that? Now, if this was continued momentum to the downside on the VIX, which by the way is bullish for the S&P, we don't want to mix that up. They're inversely related. However, if that was a lower low than what we saw back here in July, that would tell us that we're still continuing lower or most likely to continue lower. But because we have a higher low on the VIX with a lower price reading, that's a positive divergence for the VIX, or you could say that's more bearish for the S&P. Now, I am not going to put any upside targets on the S&P or the Dow at this particular point with the VIX being that low. That's more, as an analyst, it's more suicidal from a professional standpoint. However, when you look at what we talked about last week, I'll start with Apple. Remember, that was right here on this candle right here. We did the broadcast on the 6th of August. Many of you were watching live. Some of you watching the recording. The market opened right there, right around 213. Actually, it opened at 205.63, and that's when I drew this forecast line. Now, for those who are joining for the first time, understand when I draw these diagonal lines, those are my forecast lines. It doesn't necessarily mean we're going to hit that price on the date out here in August, but that's just my eye drawing it out more or less in 45-degree angles. And so you can see obviously how we hit that target like a champ. And the stock is up, what, 12.5% from the last Wednesday. All right. Now, I'm going to do a little bit of a shout out to our option traders who are members of the Matrix service. That was the very same day that we bought the November calls on that stock. Now, while the stock is up 12%, the options as of today that were purchased last week are up 151%. So this is most likely going to be our trade for the week. We have a couple of other trades that are looking really strong. We'll have to see how those work out. But right now, Apple is in number one position for being the trade of the week on Friday. Now, you also mentioned Tesla.
Yes, please.
Here's another one. Stuck my neck out on a live broadcast, which is what I'm used to doing anyway. But this was my target for Tesla last Wednesday at 329. So not only did it hit that on Friday, but it blew through it. Now, if you want, Nod, I'll do another forecast on Tesla now that all these targets have hit, because you can
Yeah,
see.
please. I know you're not afraid to do them. People will hold us
No,
accountable.
and I'm looking at the chat. I'm going to see if anyone's throwing any ticker symbols in there. Christine says was a great option trade. I'm glad you were in that one, Christine. Now remember, here's the wink, because I can't tell everyone how to trade, when to get out. I can tell you where I think the stock is going to go, or what options you might consider, or what options I'm buying or considering buying. But I can't tell you what to do. The regulators will shut it down for sure. But Christine, out to you. Here's the wink. Do you see that shooting star that we have right here today? That's a small body candle, just like that, with a shadow above the candle that's 1.5 to 2 times the length of the body. That candle is a shooting star. That is taken as a bearish signal. Now, we still have a higher low, higher high today, but look at the volume drop down here. On the way up, just after the close, we closed with a lower volume bar, and as a result of the lower volume, look at my favorite oscillator down there, the CCI. See how that's pivoting lower? Now, we're not at a sell signal. Again, for those who are brand new to the CCI, which is the Commodity Channel Index, most trading platforms have that. The sell signal will be generated when the blue line, which is the CCI reading, starts crossing below the 100 mark, which is that red line. So I'm going to go out and I'm going to forecast a possible pullback to the moving average here. You see that? So the moving average is right around, what is that, 322. I'm going to make my screen a little bit brighter so I can see that. There, 322.46. So what I'm doing is I'm coming in a little bit shy of that moving average, because as the stock is above the moving average now, the moving average will be brought up towards the stock. So that intersection there is where I'm putting my downside target for the next maybe couple of weeks for Tesla. So what is that price? Again, we're recording this live on YouTube. I'm going to round that down, actually, to 327. Get rid of those pennies. So I have a downside target on that 327 for Tesla. It's at a resistance area both here and up here. So we'll have to see with the volume drop, that's telling us that the buyers are losing some of that momentum. Now, Nod, tell everyone about what's happening tonight, because the members that were planning on giving me Tesla as a ticker symbol don't have to worry about that now. We just gave them the forecast and the target price on that. But tell our viewers what's happening tonight from 6 to 7, if you don't mind.
Yeah, for sure, AJ. So every Wednesday at 6 p.m. Eastern, AJ fields and forecasts at least 50 of your tickers live. So what people do is they log in early. Most people get in about 10 minutes early. They submit their ticker requests, and AJ grabs them, and we look at them. He looks at the technicals. He looks at everything about it, and he gives people sometimes a short-term, a long-term forecast, and often he does a deep dive and maybe does an option opportunity for you. So it's well worth it. People say it's an incredible value, and it's included in all of our bundles. So if you do want to give it a shot, do give us a free trial on our website. There's nothing that we ask for, and it doesn't hurt you. And it's a lot of fun. It's one of our fastest hours of the week.
Oh, absolutely. A lot of new things happening. We got the store open for the merch. I'm actually wearing a shirt. You can't see it because it's out of the frame, but I got
you.
I got my StickyTrades shirt on. Right? It's Under Armour right there. But I'll tell you, this we're going through a lot of changes. We're making some changes to the website that everyone's going to be very happy about. We're going to be reestablishing the rapid fire results page, which is going to show the percentage of target hit rates for individual stocks. So in other words, you'll be able to type in a ticker on our website and see just how many times it's hit the target since we've been watching those stocks, and the percentages are pretty high. Now, I'm looking at the checkup buy. I'm gonna pull this one out, Nod, save you some trouble. Will, a while back, was asking me to look at MU, which is Micron.
Got it.
And I don't mind doing this one because I think this one is going to come up as well. Again, I'm going to take this roll reversal off the chart just to clean things up right here and kind of reduce this whole thing so you see more of the price action. Now, that little candle right there, you see that? That is very close, if not a definite bearish engulfing candle. All right, bearish engulfing candle is when you have the body of a red candle engulfing the previous body of the green here. Now, taking out your trading checklist, which all of our members know about, let me do this. We're looking at the buy signals versus the sell signals, and we start at the candle. So that is a bearish engulfing, so that's going to be logged on the bearish side or the sell side of our 7-point trading checklist. See the drop in volume? A couple of weeks ago, I talked about volume as a leading indicator. When the price is going up, but the volume is going down, that's bearish because it's telling us that the buyers are losing momentum. So there we go. We put it in a check mark on the sell side. We have a wide divergence from this moving average. The stock does not like staying that far above the moving average before retracing or pulling back to that moving average. It's more like a mean reversion, as John Bollinger would look at it. So that wide divergence is going to be bearish. We have a gap below the market that's going to act as a price magnet. That is bearish. Then you go down below. The stochastic is hinging lower after being overbought. The CCI is pivoting lower after being overbought and is about to hit the sell signal there. So there are no buy signals. This has nothing to do with my opinion, folks. It's what I'm reading on the chart. So with all the points pointing lower, I have to go lower with my forecast. So here's another one like what we looked at in Tesla, where I think we could pull back to that moving average. So my downside target on Micron, all right, Will, this one's for you. Hopefully you do well with this one, is 117.44. 117.44. Now, folks, we went over the stocks that we talked about last week. We just did this one thanks to Will. This is what we do from 6 to 7 every Wednesday, where I'll go over 50 stocks just like this in rapid fire format, of course, because it's hard to get 50 stocks in when you're talking slowly. But we get in some strategy discussion. We get in some option discussion. We talk about risk management, which is really going to be the focus for today's webinar, or I guess you could say the live broadcast. And so we want to make sure that while these markets are overextended like they are, you have to make sure that you're protecting any profits, or at the very least limiting any losses, so that you don't wind up in a situation that many people did in 2000, in the crash of 2000 and 2008, where many people suffered catastrophic losses because they were taking on so much risk at the top of the market. And Nod, you know that in 2000, after we started pulling back in that year, and we had the bubble break, that took 13 years to regain those highs that were made in 1999 and 2000. 13 years. Now, they call that the lost decade, even though it was 13 years. The lost decade, it took that long to get back up over the highs. Now, can we repeat that performance? Sure we can. I'm not saying we absolutely will, but it absolutely could happen. That's why we're pounding the table on risk management. So, yeah, go ahead, Nod.
Yeah, sir. So we're flying. AJ, you talked about in rapid fire, we looked at the charts, but a lot of things we do is we look at candles. So I want to pivot away from the mega caps, and I want to go back to the little guys. So if you look at this chart that I have here on the Russell 2000, look at the IWM. Yesterday and today it posted its best day in 3 months. And you know what, AJ, from the April 8th lows that we had in the markets, small caps are up 31.9%, while large caps are up 29%. So they're actually outperforming. So I want to get your thought on that big fat candle that we saw yesterday and the follow through today, and what you see moving forward with the IWM and the small caps.
Right. Well, this is the weekly chart that I have up here now. And again, we would use the trading checklist just like we would with any stock. So let me just give myself some drawing room off to the right of this particular chart. So I'm going to draw my little buy and sell chart here, right? We're going to look at the signals. Now, on a weekly chart right here, we have a big green candle. Would that be bullish or bearish? I see that as bullish. There's no doubt that's a bullish candle. Nice big long green candle that we see that in past history, when we've had green candles on the weekly looked at long, it tends to go higher, right? Now, the other side of this is what's happening to the volume. We only have 2 more days left in this week, but I don't think the volume is going to beat last week's volume. So that would be taken as a negative or a sell signal. We're at a resistance point right now with that dropping volume. Whether or not we break out over that resistance, we'll have to see. But there is a fairly wide divergence from that moving average. So that too will be taken as a sell signal. The oscillators, negative divergences here on the stochastic. So that is going to be sell. And the CCI is overbought, but is not yet pivoted. So I would say that's more of a neutral until we get a pivot lower. So I can't with great certainty say we're going to go lower because we got some buy indications here and one neutral with the CCI. But like I said before, I have a very hard time, at least at this point, putting in upside targets. I'll do that with individual stocks all day long. But with regard to the general markets and the ETFs that are associated with those markets, I just can't do that because we got so much resistance here and we've got another resistance back here from November. Overall, you think that, wow, we're just going like gangbusters. This is a record year. No, it's a record up leg, right? If you look at the Dow or the S&P in particular, the S&P is up 33% since the lows in March and April, 33%. But when you look at from the beginning of the year or the last 12 months, we're not doing as great as everyone thinks they are. And that's why I mix up the positions. I'll go long on some stocks, I'll go short on others. But I use that trading checklist every single time when I'm talking to our members. And that's what's given us such a high percentage of accuracy with regard to the hit rates. And so, again, could we go a little bit higher? Sure. But I think it's going to really have a tough time getting over that resistance from back here. And I'm sure Tom Lee would have a different opinion than I do because he has to go long. I don't have to go short, but he has to go long. Otherwise, all of his clients are going to leave his funds. And then guess what? They pull money out and then his fund takes a hit. So you have to understand a lot of the analysts that are still bullish, they have to be bullish. They can't be bearish because they're going to destroy themselves. You see, so I'm coming from a different angle where I'm not necessarily looking at the fundamentals of the market. I'm looking at the technicals and then drawing my conclusions from there. And that's how we play it safe.
Well, that's two. We have two sides that makes a market, AJ. And listen, speaking of markets, I have two daughters in college now, and for the next 3 years, I'm paying extra attention to prices. So if you check out this tab here, I'm going to list this out. This is the change of prices of items that are important to us over the last 5 years. So the consumer has carried this cost burden. Insurance, home prices, and food have all hit all of us. I don't care who you are or what your wealth is. You felt this. So if I move forward to this next tab, this talks about the level of inflation and where it's moved from month to month. And this has given people the idea that the Fed should or will cut rates in September. So AJ, I want to pick your brain on a few equities that are especially sensitive in inflationary times. Let's go with the first one, which is Tapestry, TPR, and follow that up with AMAT, please.
Okay, now this one I would definitely not be going bearish on because of the persistence in this trend right here. If I take a step back and look at the weekly, it's obviously going to look a little bit more overextended. You could see that. And it was about 2 or 3 weeks ago, we were talking about fan lines. Now, this would be a fan line here, which was the original trend. Then I would accelerate the fan line. So we are on the weekly chart, we are at 3 fan lines, which is considered to be overbought when you're using fan lines. But when you look at the technicals, remember what I said before about the volume? You see that candle, it's green, but look at the volume increase on the way up. Price and volume take precedence over the oscillators. So with this one, I'm not going to draw any forecasts on here because we're going to have to leave that for our members tonight. I'll limit the forecast to 2 every Wednesday if we could. I see a lot of ticker symbols coming in the chat, but we'll go over again 50 stocks from 6 to 7. But I do think this one has a little bit more upside. And then you have to keep an eye on the volume. Whoever might be long this one, once the volume starts dropping, you're most likely going to see profit taking move in from the investors who bought it down here at 90. And now they're faced with, do I take the profit or do I risk the profit? That's the only 2 choices you have when the market is starting to get to a top. So I think once you get up to 115, 117, the people that bought it at 90 not too long ago, just last month, they're scratching their heads going, man, I think I should take the profit. And some will, but guess what? The majority won't. And that's the group of folks that I talk about most when I say don't turn a winner into a loser. risk management is so important. So let's talk about that. If I were long, I can only talk to you about this stock as if I had it, but I don't have it. If I had this stock, I'd be putting my stop below that fan line that I drew. That's number 3 fan line. If you want to be a little bit more conservative, you would put your stop below the moving average. You can move that up, and you're going to be more, I guess you could say the volatility is going to be more likely to stop you out at the higher stop level. Now, we promote the 1% rule for managing risk. And if you didn't get that, go listen to the Technical Tuesday video. I spent about 8, maybe 9 minutes explaining a very simple math formula that will help you not only manage risk, but it will help you with sizing the position properly so that you're not exhausting all of your buying power. You know, the way most people do it, Nod, you've seen this over and over. You've been in the industry long enough. People look at their accounts. They see how much cash they have available. They look at the price of the stock. Then they take the cash that they have, divide it by the price of the stock, and they say, oh, look how many shares I get to buy. That's the absolute wrong way to do it, because now you've spent all your buying power. If there's another opportunity coming down the road in another stock, you're not going to be able to participate on that because you've spent all your buying power on this one stock. You see, so it helps you size the position. It helps you limit the risk on the way down.
Well, and speaking of another stock, AJ, again, these other two are sensitive to rates as well. How about AMAT or Devon, please? Because I think both of those, if I did some time, I geeked out. I looked at these in different times, and they both are very sensitive to rate environments.
Well, Applied Materials is still going up. I think you got a little bit more room on the upside to this resistance here. Volume is going up, so it's most likely going to go up. However, with regard to the interest rates, I'm gonna show you something. If you look at the 10-year, okay, this is a 10-year futures right now. You see the yield is now dropping. That's a bearish engulfing on the yield. Now, what do you got to go on the forecast rates? Everyone's betting that the Fed is going to drop rates, but what if they don't? Well, if they don't, then the real estate market is most likely going to take the biggest hit, I think, because we have a lot of realtors that are members that tell us about that all the time.
You're making Tim cringe. Be careful.
Yeah, we got to. I keep talking about bringing Tim Lindsay on. We're going to bring him on and talk about the real estate market. That's his area of expertise. But he's going to be very happy about this bearish engulfing candle. I'll tell you that right away. Now, Devon, DEV, we've talked about this one because it's is it forward slash?
No, it's DVN.
Oh, DVN. Okay, DVN. It's a dollar sign. I don't have it on my chart here. If not, we can skip it. Yeah,
that's okay. I mean, it's really just it's an energy related name. So you could probably throw in XOM as their Exxon as well, because they're kind of pari passu in this environment.
Yeah. See, now with the 10-year dropping, with the bearish engulfing, what do we see here on Exxon Mobile? We got a bullish engulfing. See, so here's one that I would be more like to go on the upside, particularly with option trades with a positive delta. Right now, we've traded Exxon Mobile before. We've done well with it. If it does a great job following the technicals, and what the heck, I might as well put a forecast on there.
You're so generous.
I don't want to go too far because we're cutting into the members who pay for the service. We give a lot away for free.
I would agree. I would agree.
But I'm going to go upside on Exxon Mobil to 108.43. Which is going to be just a hair below this moving average at 108.90, where it is right now. Now, remember, that moving average will be coming down until the price starts moving back above. But real quick, again, using that trading checklist. And by the way, folks, if you're brand new to this channel, go to our webpage, contact us. We will send you the hard copy, or at least in PDF form, the trading checklist as we put it out to our members. Right now, I'm drawing little stick figure signals here, but we have a document that you could do very well with. So you look at the bullish engulfing, no doubt that's bullish, right? We just talked about that. You could see that we have an increase in volume on the way up. Oh, guess what? That's bullish because the buyers are motivated. Now we're coming out of a wide divergence below the moving average. So we're snapping back to the moving average, called the rubber band effect. That's bullish. And you look down below, the stochastic is about to cross with a buy signal. That's bullish. And the CCI just came out of crossing with a buy signal. So there are no sell signals on that. Again, it has nothing to do with my opinion. Has everything to do with the technical charts. Now, the option traders out there, shout out in the chat How many of you, I'm going to ask you a question. We've never done this before. How many in the live chat would take a position Exxon Mobile through the options? And if so, what option position would you take? I'm curious. I know there's a lag in the chat. Maybe you could shout that one out when you see it, Nod. But that's what we do. We analyze the charts. We take positions according to the signals on the charts. We manage risk along the way, and everyone's happy. And that's how we operate and how we roll, if you will, at StickyTrades. So
Well,
you haven't talked about any economic news or data. What do you have on the calendar for the rest of this week?
Well, I mean, really, all eyes were on CPI, and it kind of behaved. Following CPI is PPI, so we've got that, and we have a bunch of Fed comments because we're coming out of the last Fed decision, and thankfully there was a blackout window, so all the governors couldn't speak. So now they're going to they're going to let some air out of the balloon a little bit, but everyone is focused on actually the close out of this earnings season into next earnings season, and then we've got Q3, and we've got another Fed decision. Again, we've talked about September. Everyone is assuming something will happen, and I guess now it's down to 25 and 50. And again, I was talking to some of our VIPs. The last time the Fed moved 50 basis points, AJ, and this is just my opinion, it was in a catastrophic circumstance, and bad things happen. So I really don't see that as an opportunity. I call that a Blutarski, a 0.0 chance. But 25 should be on the table, and I do think that that's more of a figurative move. That's something that's not really going to shake the markets out, but it'll set a tone for the rest of the world. So we do our best not to get caught up in this, AJ, and not get stuck in the distractions.
I mean, Powell obviously has a lot of pressure on him from this administration, and he is still looking at the possibility of inflation through the tariffs. And a lot of analysts, I think, are finding out to be wrong on that note, because we really haven't seen an explosive number in the inflation numbers. But I think he will eventually cave just under pressure. The markets will most likely rally if that does happen. And then what follows after that, what do you say? You buy the rumor, sell the news. So right now, people are still buying the rumor, or at least the anticipation that rates will come down. They're taking risk at the top of the market. But once the news comes out, you're either going to see massive profit taking, or the institutions, I believe, will go more heavily into a short position. Now, shout out to a couple of folks that did answer my question. I'll do you. Hey, listen, you're public. You're recorded all with your name on there anyway. So Mike Lindell is in the house. He would go with a credit put spread on XOM. I would go with that one. Tim Lindsay said he would go with a directional long call on XOM. You could do both, by the way, with Mike Lindell and Tim Lindsay are doing both. Pilot Petey is November 150s. I'm thinking those are calls. He didn't put a C or a P next to that. Tom E said the November 120 calls. I love the fact that you're going out to November so you don't suffer time decay. Alan Plott says the November 120 calls. So he's going a little bit closer to the money, still out of the money, but close to the money. And then we've got Stephen Burns saying in the money calls in December. Wow, we got a lot of option traders on here, more than I expected. And guess what?
AJ, James R is saying a call spread, 107.5 to 117.5 call spread. So that's a little bit more.
Here's the question: are you long the call spread or short the call spread? I know some people that don't even know what the heck we're talking about with options saying, get back to the charts. I have no idea. You're talking Greek to me. But I'm telling you, folks, I just showed you what happened with Apple, with the stock going up 12.5%. The options that would cost a lot less than the stock went up 151%. And again, I'll talk more about that on Friday during the weekly market report. And now we have time for one more comment or question, and then we're going to go into a wrap because we got 1 minute to go.
Yeah, we really took this thing sideways, but can you just do a quick crop dust on Bitcoin, gold, and silver, whatever we can get in, because I have about 13 different requests.
We'll look at Bitcoin. Now, I think Bitcoin is going to continue higher, mainly because of all what's being talked about with the Treasury and the Treasury Secretary and the stable coin. Now, we don't know what's going to happen with Bitcoin, but as soon as they start introducing cryptocurrencies into our economy, I think it's going to get volatile like you've never seen volatility before. So with Bitcoin, I would go a little bit higher. I had a downside target. It didn't even blanket that downside target, but I would put an upside target on Bitcoin at 126,259. And that's coming to you live on this midweek report with Nod and I. Folks, I want to thank you so much for joining us. This has been a lot of fun. These 30 minutes go way too fast.
So
If
fast.
you want to continue this conversation, come join us over at the Rapid Fire webinar that starts at 6 o'clock tonight. You have a free 15-day trial if you want to take advantage of that. There's no strings attached. We talk about that all the time. No sales pressure. You don't even need your credit card. Just come on in, show up, plug in, learn a lot. And then if you want to stick around, you can. If not, that 15-day membership just expires without you having to cancel it. So, Nod, thank you so much. I had a good time. Thank you, everyone, for watching. We'll talk to you on the next report. So long.